everybody. Welcome to Market Mavericks. How are you guys doing today? Hope you're doing
Hello.
well. Scott, we almost missed you. I just saw you
I
pop on there
my
last
camera
second.
wouldn't work. My camera wouldn't work, so I quickly had to set up some sort of makeshift backup camera here that I'm trying to use. So yeah, I
Nice. Well,
kept going in
at
and out
least,
when I was on with Raul Paul this morning. Not great.
at least we can hear you loud and clear. So that's awesome, man. So welcome everybody. Thanks for joining. I think we have a fair amount to discuss, right? We're seeing some weakness in Bitcoin the last week. Obviously, it's still in that range you've been talking about, Scott. Mike, we've been talking about how the markets are due for some sort of flush. It seemed like Nvidia was the only one lifting the markets for the last week or so since the last Market Mavericks. Finally, we might have a reversal day on that. Where do you guys want to start? What are you thinking today?
I leave that
Well,
in Mike's capable hands because I
I,
know he's got something on his
I,
mind.
I think those are good starts. So I think one thing the market hasn't factored in yet is this reverse détente. Remember the détente we got in the 90s and the 2000s that really boosted the U.S. and U.S. equity markets. Every day now you see Putin and Xi in North Korea solidifying their access to bad guys. And I think that's something that's going to be becoming more and more significant. It's part of the reason I'm very bullish gold. Um, and still, and a little more careful about Bitcoin because of risk assets. At some point, I'm still worried about now. So we have minor correction S&P 500 so far today, but I think the weakness, the relative weakness we've seen in Bitcoin since that peak in March is. I still think it's going to be the leading indicator for correction in beta, just normal correction. And at some point, Bitcoin's going to come out ahead, but we still haven't even got close to that. Now, it started in Europe a week ago. Europe looks like it's finally peaked, the European Euro stocks, and it got a trigger. And it's, I think in this country, and the rest of the world, it's just, to me, the stock markets is a tinderbox awaiting a trigger for reversion. And it's just normal reversion. Things are just so expensive.
Yeah, I just brought up the DAX chart because this one was one I
Right.
was looking at just the last couple of days. You had this wedge pattern, and we actually did just break down out of it. For those of you out there listening that maybe are not aware, there's a lot of political upheaval in France. I think the thing that caught me maybe slightly off guard was I think one of the officials in France was asked, could what's going on there cause a financial crisis? And the answer was yes. And then almost immediately within 24 hours, the EU was calling on France to get control of their debt, which is, I think, about 110% of GDP. So there's no doubt that there's some issues over there. And I guess I'll throw this to you guys is like one of my big concerns is that we are on a tinderbox of debt in the globe, right? And so, the odds are that if something goes wrong in Europe, it easily could be a contagion effect, right?
Definitely, and it can go in there. It's part of the reason I'm pretty bullish gold versus virtually everything else, most notably in commodities versus all industrial metals versus copper, and why I'm concerned about Bitcoin. But here, I just want to show you a quick chart that, and then we can pivot over to Scott in a second. This is, again, the Bitcoin versus S&P 500. Right now, it takes basically 12 S&P 500s per one Bitcoin. The peak was around 15. And one thing that's so simple and so significant, this little orange chart, that's if you just take the S&P 500, divide by 100, by its 100-week moving average, you never really want to get long it when it's 25% above its 100-week moving average. Now, this period here, that was the only period in history, and that was the biggest pump in history from COVID, the biggest liquidity pump in history. And I just overlay that with the Bitcoin versus S&P 500 chart, and it looks like it's ticking down. It just looks ready for a normal reversion. And we're so, it has to happen when you least expect it, and maybe because it's slow, but I don't know what the trigger is going to be, but you just never want to get overweight long the S&P 500 here. And the thing is, I learned by trading is I'm not good at buying, trading shorts and everything, but you're just underweight.
Yeah. Scott, where are we with the Bitcoin situation? Like obviously I've seen more and more political positives as elections near, so that's good, but certainly we're not seeing a response yet. And I even saw something that MicroStrategy's bought almost another 700-800 billion dollars in Bitcoin, but that again didn't move the needle at all on Bitcoin. So can you give us some background on what's going on there?
Well, the MicroStrategy buys never move the market. He does it in a pretty a manner that to make sure that it doesn't, and in micro buys, and he announced this convertible note in advance of doing the actual buying. But I mean, $700 million, as exciting as it is, a drop in the bucket even for daily volume of Bitcoin. So that shouldn't technically move the market. And I think everyone's used to Michael Saylor raising debt, taking any money he can find in the piggy bank or in the cushions of his couch and throwing it into Bitcoin, right? Which has been a highly effective strategy. I believe now he's up over $6 billion on his Bitcoin, which is at a cost basis of roughly $38,000. So we'll take a hell of a correction. And you got to remember, people were saying he was going to get liquidated, that MicroStrategy was going to go under. If Bitcoin went under 25, it went to 15, and here we are. Right. So that should be a lesson, I think, to people in dollar cost averaging, by the way. If you don't want to try to get smarter than the market, just keep buying the asset that you love with a long time frame in mind, and do it over a very long time frame like he has. But I don't expect anything to happen in Bitcoin. I've said that over and over again. I don't disagree that it's been weak relative to other markets, but the beauty of Bitcoin in my mind is when it's weak relative to other markets or strong relative to other markets is that it's not a correlated asset, which makes me feel good because I've been saying it for years. And so we want that correlation to detach to the upside and not to the downside, but it's still evidence of the fact that Bitcoin sort of has a mind of its own. I expect at least 2 to 3 more months of sideways for Bitcoin. Sideways with probably with a trend generally kind of down in that sideways, like we're seeing, low volume, bleeding. And then hopefully, ramping into the election cycle and such, we see what we've seen in the past few cycles is that we get that move to the upside and then go parabolic into the next year. Now, listen, it's a little scary to think that we're just going to do it because we've done it before, right? So things are different every single time. But if it ain't broke, don't try to fix it. We'll see.
So when your take on Bitcoin is that it's not correlated or inversely correlated, so it's not even like a digital gold. You think it's kind of in a world of its own?
It doesn't trade like gold.
Yeah.
It doesn't usually trade like tech stocks. It does sometimes. It certainly doesn't trade like a currency. So what does it trade like?
Yeah.
Its own itself. It's one thing I love about Bitcoin. It's the most unique thing on the planet, and it's the most widely traded liquid asset. Digital asset trades 24/7. I think it's tilts over to that leading indicator fact. I mean, unfortunately, on weekends, if something goes bad, you can sell Bitcoin. You can't. It's harder to sell gold and harder to sell stock market. So that might be a problem.
That hurts it in the short term for sure.
It's a short term thing. Yeah.
But liquidity should be good. But 24/7, 365 liquidity should be a selling point, not a point against long term.
Agreed, completely. But I wanted to show you just a few charts, and let's pivot over a little bit. First, the micro. We have the second weekly gap on the S&P 500 E-minis since 1997. We've never left one, so now we have two. I just showed you here. I overlay with Bitcoin. Just one thing I used to love was Bitcoin used to lead bait, and now it's somebody doing this crocodile jaw pattern. But I want to show you, just give me a few minutes to show you the macro and a big picture real quick. First of all, here's a problem in the macro that's different from 2008 and worse. This is U.S. retail sales less CPI. It's negative, and it's worse than it was before the great financial crisis. So that's strike number one. Another good leading indicator for the financial crisis was container board boxes. In white, I show you that it's plunging at the same velocities it did that preceded the financial crisis. And we have declining diesel demand. This is stuff I'm not making up. I'm just showing facts. And yet we haven't had this recession yet. Wonderful. It's good we haven't had it, but container board boxes, that's for everything. One other thing, unemployment's rising. We see that. It's just getting started. It's never done this without going to 6%. And I overlay this with gold versus silver. You can do it with gold versus virtually any risk asset. And it should, my bias is gold versus silver is potentially bottoming. And then we also have this other thing that used to matter, the yield curve. I take the extent of it. It's just the 30-year yield minus the Fed funds effective rate. It's much steeper than it was right before the great financial crisis. It looks like it's finally just starting to tick higher. And I'll just show you one other one, and I can rest and pivot. And this is another indicator that's just as bad as it was right before the 2008 crisis. Is you just take the VIX volatility index, it's 52-week moving average minus T-bill. Minus a T-bill, very low volatility. Volatility's always been reverting. The last time we got this low was right before in 2006. I was way early then, and very high T-bills. This is not a good environment for risk assets, and Bitcoin's just a risky asset. That's why I say it still should be overweight in treasuries. But to me, that's why I look at it. I'll just end with this. This is the last one I'll show you. The big difference from 2008 is this is CPI. It's sticky. It's stuck at 3.4%, right? is actually where it was in 2000, and actually much lower than it was in 2008. Why? Because crude oil was bouncing back then. The difference is the stock market's so much more expensive. You look at S&P 500 right now, U.S. stocks are 2 times GDP. Right before the financial crisis, they were spot on. They were the same as GDP. That's why I can't take that out of my head. That's all that matters when you get that expensive.
So one of the things that I'm kind of curious about with your guys' view is, I mean, are you guys seeing any sort of black swan events coming up? Like, like obviously we have the US elections and generally markets have been stable except in 08. I mean, there's a couple instances where going into elections, things weren't so good. But when I look at what's going on in Europe, and then I want to show this chart here and get your reaction to this one. This is the dollar yen. And one of the things I'm noticing on the dollar yen is the highest daily close was back on April 26th. And if you look at this, look, we just broke above that on today's price action. And so Mike, you can probably explain to people more than anything what's going on here. But like you have the Japanese central bank that intervened over here and we saw a dip and now we're moving right back up. What are they going to have to do if they intervene? Like, how does that all play out in the financial and Forex markets?
I love when Scott remembers when I say that quote, what stops it. I don't see what can stop that. And because you have 1% or 0% interest rates in Japan, US T-bill is 5.33% effective Fed funds. That interest rate disparity is shocking. And then you have the engine of economic growth in that region of the world, China, just plunging into a deflationary recession. And I can show you that a little bit in the charts, but interest rate disparity, and then you look at that's what I show you here. This is the Chinese government 10-year note minus the U.S. government 10-year note. The U.S. government, it's 200 basis points below the U.S. Before the great financial crisis, it was running close to 100 basis points above the U.S. So the whole world is tilting towards recession. China there, Japan there, Europe there, Swiss National Bank cutting rates today. Why? Because they have to. And everything's being held up by the U.S. stock market. I hate to say that, but it's just the fact that what's really been holding up the strength of the dollar, which you just showed me with the dollar yen, is if you look at the U.S. stock market overweighted divided by the MSCI ex-U.S., the U.S. stock market outperforming the rest of the world for the last almost 15 years, overlaid with the dollar, they've been going up for tick. You see the risk there? The dollar's breaking things. The yen is breaking. And only thing that really stops it is you have to have U.S. rates to go lower, which means you probably have to have risk assets go down.
All right, man. So we have those risks out there. We obviously have Taiwan and China, and that's another thing. I mean, Scott, I'd like to get your opinion on this. Is we see, and Mike mentioned this, is that every other day it seems like Putin's meeting with either the Russian, the North Korean leader or the Chinese leader. Is the cozying up there being done because there could be some action against Taiwan? I mean, is he kind of saying, hey, listen, I know everyone else is not going to be our friends when we do this, so we got to make sure that our friends are good here? What do you think about that?
I don't know if I'm geopolitically versed enough to make that determination. All I can say is I go back to something that Mike has actually harped on quite often, is that all of this just shows how strong the dollar is. You see the yen performing so poorly against the dollar. Bitcoiners love to talk about the collapse of the dollar. People love to talk about the collapse of the fiat system. But at the end of the day, even if you're just the cleanest shirt in the dirty laundry, where are other people going to go? The dollar has its problems, but the entire world for decades has been trying to come up with a way to get off of it, and they can't, right? The petrodollar deal ended. We kind of discussed that maybe as a nothing burger. You get a bunch of dictators together. I don't think that's going to be like a cohesive unit that's going to, long-term come up with some solution to this problem. I think that it's kind of the dollar milkshake. I mean, the whole world always will need demand for the dollars. We see it in crypto, right? I mean, it's a great narrative for Bitcoiners to say that poor people all over the world who are living in hyperinflating economies and nations, they should buy Bitcoin because it will store wealth and store value. But what are they really doing? They're buying synthetic dollars, or digital dollars, as Mike likes to call Tether, and they're doing it on Tron, which is arguably the most hated network to anybody who's actually crypto native, but it's cheap, fast, and the wallets are easy to use. And when someone says in Argentina, hey, dude, I need to send you $20, download this wallet, they don't care. Right. And so at the end of the day, this shows that even in crypto, the greatest demand, our killer app, is dollars. It is. And that's what people want all over the world. So I think that obviously a Putin and a Xi are cognizant of that, but it doesn't mean they have the tools to fight it.
I think you just pointed out what's happening politically too. The both sides of the hour are figuring out, okay, this technology is so revolutionary. Okay, it's hard to keep up with it, but it's really enhancing everything that's U.S. I mean, it's gone right for the dollar. It's gone right for treasuries. It's tokenizing these things. It's not going for the yuan. And our politicians are starting to figure out. So in the long term, yes, that's very good. But it's also pointing out that the value of, I still look at Bitcoin as the kind of thing is, why would you ever use it to buy anything unless you had to? Because you want to, it's going to inflate over time, or deflate over time. But the dollar's going to inflate over time just gradually. It's just so easy to transact with the dollar. It's much better for that. And the world's gone through that through crypto. So we can focus on the macro, but that shows the strength of the dollar, strength of the U.S. system, and this increasingly hot Cold War that's just revving up on a daily basis.
When we turn, like, so you're talking about Tron and the different things there. I mean, when I look at other cryptocurrencies, honestly, aside from Ethereum, everything's just mostly, I mean, Toncoin has done well, but most of them have been crushed down. I mean, is it really just at this point a one or two horse show? At the Mike, Scott, what do you think about
at this point in the cycle, but not at this point for crypto? So, like, okay, as I've said many times, we had this exceptional, we'll call it a white swan event of the Bitcoin spot ETFs being approved, right? And so if you believed in the cycles, if you looked at where we should be, we got way ahead of that, right? I think I've made the argument to Mike and with Dave Weisberger before Macro Monday. No ETF. I think Bitcoin is comfortably trading between $38,000 and $45,000 right now, right? Ranging sideways in the exact same manner, just $20,000 lower. And altcoins are exactly where they are right now. So what we had was this very unique white swan event that really only accrued value to Bitcoin itself, because Bitcoin spot ETF buyers can't allow that liquidity to trickle down into altcoins, right? You can't go on your E-Trade IRA and sell your spot ETF that's done well and buy Toncoin, right? So in the past, when you see these huge moves up in Bitcoin, people get bored, it goes sideways, and they start to look for riskier ways to gain upside, and they go down into altcoins. That hasn't happened yet, but that shouldn't have happened yet in this part of the cycle anyways. If you look at the 4-year cycle, you get the 6 months of boring with Bitcoin. Altcoins kind of bleed out because there's no new money, and then the fall, things go up. That could be the global liquidity cycle. That may be the halving cycle. That may be the election cycle. All of those things align on the same 4-year cycle. So it's hard to point at causation or correlation or to say it'll happen again. But we do know that election season generally is good. So I would expect risk assets, if that happens, to perform well, which means we'll finally see that trickle down into altcoins.
So I just want to push back on that one time. I remember 2008 election season didn't do so well that year.
Yeah.
When I hear that from everybody, I get concerned. And it's the lessons of Benjamin Disraeli. What we generally assume or anticipate doesn't occur. I'm literally hearing that from everybody. So I'm like, okay, well, that means they're justifying their positions. And I look at the market. How stretched is it? Pretty stretched. What's the prudent thing to do? 5.33 in the T-bill. Overweight that.
So
I will say there are a lot of bears, though. I do get the everyone thing, and I think in crypto there is a definitely like an everyone sentiment. The people who are in crypto in the echo chamber all believe effectively in the 4-year cycle. I think outside of crypto, there are a hell of a lot of crypto bears and a hell of a lot of people who take your view, Mike, which is that there's an impending recession or depression. They've just pulled the levers to kick that can further down the road with time. Kind of where I stand, by the way.
Scott, what do you think about Ethereum here? I mean, we had the run up once it looked like it was going to be approved. The ETF would be approved. It got approved. Price didn't really do anything. Now it's coming back in. Is this just, what's the catalyst for that next move up in Ethereum?
The biggest moves up in Ethereum in the past have been after Bitcoin really tops. People forget that Bitcoin in 2017 hit that 20,000 high. The run that Ethereum went on after that for 1 month was absolutely astronomical. I only have my Bitcoin chart up because of this mess with my camera stuff. But I mean, Ethereum went to 1,400 from the low hundreds in a matter of a month. So it's not unusual for that to happen if you're looking at the cycles. We're in a part where no news means anything to the market. Bad news, nothing happens. Good news, nothing happens. That's the classic sideways post-halving chop. I mean, Ethereum just had the SEC drop or choose not to charge consensus after sending them a Wells notice That's really, really wild if you think about it. The SEC under Gary Gensler has sent Wells notice and then followed through consistently. So this is a very clear change in the winds politically. And certainly now that we have an Ethereum spot ETF and the SEC choosing not to pursue effectively Ethereum and consensus as a securities transaction, even at the launch, gives a lot of clarity, and nothing happened. Ethereum went up 3%, it dropped 2%. We're just, but things are becoming much clearer for Ethereum. It's clearly going to become the number 2 asset as far as institutional adoption. I would argue that if it was a different time in the cycle, we would have seen a massive Ethereum move. By the way, we did, right? When we saw the spot ETF news come, it went up 30-40% versus US dollar. That 30% move was huge. We commented that there was one day when Ethereum added an entire Solana market cap on that upside move, right? Just to give you an idea of how large these assets are. So I think it's just a sleeping giant. I mean, personally, maybe it won't be, maybe it won't happen, but it's all tailwinds for Ethereum. I mean, the regulatory clarity, legislative clarity, it's all there, right? And some level of potential institutional adoption.
What do you guys think about the economic data that we've seen lately, right? I mean, we've seen a little bit of a downtick in CPI data. We've seen jobless claims today came out again in the 230 to 240 range versus 2 months ago. It was very clearly between 200 and 220. So there's definitely some weakening going on here. But I guess the question I would throw out there is does this foretell a recession? And if it does, is it by year end? Is it by 2025 first quarter? I mean, what's the time frame, Mike, when you're looking at this stuff?
So I have to admit, for me, I'm making the call of a lifetime, and can't expect it to be that easy. I mean, I'm just showing these charts I've been showing forever. This to me is as bad as it was, as I recall, 99 and 2007. And it just as I point out is we've just never had the stock market this high in my life. Except for that little period during the COVID when we all had pumps. So to me, it's going to be what usually happens in markets is a typical reversion. It's all starting to trickle that way. Now we all know what's happening with, and we've reached the point where the lesson I learned coming to New York, the trading pits in '93, coming from the Chicago trading pits, was Mike, in this country, certainly New York, the stock market is designed to go up. I get that. Well, at some point it gets too high. And to me, that's what's happened. And also at some point, we just have people can only spend so much and they just cycles always tilt over to regular cycles. So I do enjoy when people say, yes, there's going to be a Fed put. I'm like, yeah, that'll happen after we have the first 20% correction in the stock market. They might even start easing soon if they justify it with unemployment going up. But unemployment is going up from the lowest levels in our lifetimes, almost 3.4%. It always goes to 6. I don't want to underestimate the kind of call I'm making, but it's very unusual. It's actually in a big cycle thing. It's very usual, but it's very unusual for human nature to shift toward that mantra until it really kicks in. And everything to me is bottom line. People will not believe it until they start losing money in equities and keep losing money, meaning when they don't get that, okay, it goes down 10% and it doesn't go up like it has been for virtually every money manager in the business for the last 15 years. They haven't really seen when it goes down and stays down for 5 years. That's what I'm predicting. It's not unusual. It just always happened. We just never had it this expensive.
So I'm just looking here I was just looking at the Nvidia chart, which is actually pretty remarkable. I've been watching all day because I'm curious if we'll get a reversal engulfing candle today, which again, on a technical analysis basis, what you have to do is you have to open up above the previous candle, which we did, and actually close below the lowest point of that previous candle there. Right now, if we close here, it would be a reversal engulfing candle, potentially major top. I was looking at the data on Nvidia. Since the beginning of the year, it gained almost $2 trillion in value in terms of market cap. I mean, if you told me that 2 years ago that we'd see that in a 6 month period on anything, I would have said insane. But do we agree that if Nvidia's topped, the markets have likely topped, or do you think that there's other stocks out there that can then take over and take the lead?
Yeah,
I think Nvidia tops the market tops. I agree with it. Driving everything.
And what usually happens in markets like that, you get a 50% correction. It's still up a lot, but it just came back 50%. And what does that mean for everything? That's just I'm just looking for a little test. We used to have those. I have to admit, I'm almost 60. I just know this is going to happen again. We haven't even had that little test, just a little 5% this year. So that's why, like you pointed out, it looks like Nvidia, I look at that, it's like an outside day down potentially in the last 4 or 5 days on the week. that's topish. Then, but I just trying to pick tops in that market. I would look at maybe structure a put strategy with a stop, but I lost my hair trying to do those kind of things.
All right. So as we kind of come towards the end today, what's something else that's on your radars? Each of you guys can let us know, but like, what out there is catching your eye that we should be watching, that everyone else should be watching? Is there anything out there?
Yeah, I mean, you kind of alluded to what do we make of all of this data, and what I make of it is that it's extremely muddled. I mean, I've said this before. I've never been so confused by the conflicting data that they're supposed to be utilizing to make these grand decisions on the direction of the economy, and also we keep looking at all of this data and then they just revise it, and we don't pay attention to the revisions. So I don't even understand how a person is rationally supposed to dig into this and understand what's happening. It's like flabbergasting. I don't, it's hard to formulate a strong opinion on the macro for me at this point because it just seems so muddled.
So go ahead.
No, I was just going to say, do you guys think that the oil pop that we've been seeing is going to be long lasting? Like, Mike, are you
No,
looking at that and saying, or do you think
so.
it's just a short term bounce here?
Short-term bounce, but I can show you the chart on that real quick. Is oil is completely sold out. I mean, it's completely sold out as you get. I'm showing Brent in this picture. Managed money net positions, i.e. future specs, got the least long in our database going back to 2011. So they pushed that market up to the peak. Around what was it? I forget the exact high was around just around 92 in May, and then flushed it down to 78. Now they're completely sold out. But I think that's indicative, and they've been riding this nice trend line going up. At some point, I think that trend line is going to break. It did in natural gas. It's going to break in corn. We just get in a normal growing season. It's just a normal cycle. And then I always have to go back to this. What's happening in the largest demand pull source for any commodity, most notably for crude oil, in the last 10 years? They're plunging. China's in a severe deflationary recession if you look at their bond yields. And of course, I'm a bond trader. But so to me, that's the thing, a short-term bounce. But at some point, I think it's tradable. It might even get to the upper end of the range. But I think it eventually breaks down, drops below. And I think that's what's happening with hedge funds. They're getting it. They're getting this as a shift in the paradigm of crude oil. Before they didn't get it. I mean, I was too early. I got way too bearish here. And finally, we got this. But it's what crude oil always does. It has to get cheap around 40. And if it doesn't get cheap, the cycles of excess supply and declining demand out of the U.S. are accelerating. I just want to show you that one thing about what's happening with crude oil. The demand for diesel in this country is the same as it was 10 years ago. That's never happened outside of a recession.
So Mike, isn't it, can't you just take also a cynical view? I mean, just looking at this politically at this point in the cycle, really cheap gas is really good for the incumbent.
Sure. Yeah, it was. I heard today that there's inklings of more releases SPR that would be inappropriate now. The last time I was completely for it, and I'd say President Biden was one of the best crude oil traders ever. I can explain how he did it.
That too.
When you liquidate into backwardation, thank you very much. You get that high price and you just buy those out of money futures, and you're just a good manager of inventory. Now it's a different story. If the war escalates prices, sure, but otherwise it would be too political now.
Yeah. You can't have $5, at the pump and expect to win, just like you can't have the market crashing or inflation exceptionally high. That's just one of those things that's easy, I would say, relatively easy for a government to manipulate, and they're just not going to let it happen. You just can't. You can't have high prices at the pump and win an election. They're going to keep those down.
Well, we have the debate coming up, right? Anyway, either of you guys going to watch that?
I guess.
I guess.
Can I chat GPT it afterwards? I don't know. It says it's for a summary. It seems like very painful. I really wish RFK was going to be there, even just as a spoiler or just to hear what he would have to say. I think it's unfortunate that our debates are going to be these two guys.
Yeah.
Regardless of your political opinion, we just need more energy in the room.
Yeah, no, I've said that for a while. It's not a good representation of the population anymore to have 80-year-olds there. It just doesn't make sense. But anyways, we'll digress on that topic for another time. Thank you, gentlemen, for coming on today with Market Mavericks. This is always so much fun, always so insightful. Thank you all for watching, and follow these gentlemen right below, and we'll see you next Thursday. Have a good one.
Thank you, guys.